Hello, everyone. Welcome back to howtotrade.com. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, it's President's Day. So this is our President's Day edition. We've got the big flag in the background here. We're looking to really watch our risk today. You know, I got some emails. I got some private messages from earlier today that, I have to mention one of them, and I'll mention it right off the bat here during the live stream. It was a sort of a question about mentorship and one-on-one meetings and things. And right now, I'm just sort of a one-man band. But if you reach out to me and we can maybe we can make something work. I've got a little bit of time probably later this week. So if we gotta get some folks in, and you know who you are out there that asked for it, we can see what we can do. What I'm going to say is this. If you're losing a lot of money in the markets, stop. Stop. You're not going to see anybody else out there on YouTube. You're not going to see anybody else out there on a live stream telling you to do that. They all make a living off of you guys tuning in every day looking for guidance. And I'm telling you right now, as somebody who's been there, when you start losing, stop. That's the most important thing to do, is to slow down your trading. And I find myself fighting with the same stuff every single day, especially if I take a loss in the morning. Immediately, I want to get it back. I want to get it back. I want to get it back. I want to get on the right side of the ledger. And what happens inevitably is you overtrade and you lose. You lose more. So what we have to do is we have to figure out a way to compound our success. When you're winning, bet more. Bet more. When you're losing, bet less. And I have to tell you guys that after being in this market for 15 years, 14 years now, that's what it's always boiled down to. If you're going to make it, make the hot streaks really run. And when you're having trouble, you dial it back. You bring it in. And a lot of those things you can do in life as well. If things aren't going well in life, bring it all in. Easy. Get what you know in front of you and then do what you know every day. And that's what the markets are to me. That's what I try to really instill in everybody that watches these live streams and the videos and everything. It doesn't have to be hard. Make it easy. Make it easy on yourself. The markets are always going to be there. You have time. Now, some of us don't have as much time as we would like. I'm 46 years old in June. I wish I had a lot more decades and a lot more years to sit here and do this. I don't. So the way that I trade is going to be a lot different than the way that you trade if you're 19 or 20 or 22, 23, 24. If you're 30, I started in this game when I was 31 years old. I didn't have a choice. The market absolutely fell out. I mean, absolutely obliterated us in the real estate market. I had to do something. Here I am. I'm still here. If I'm still here, you can still be here. Believe me. Believe me. I'm not a rocket scientist. You don't have to be. You have to know what you know, though. And every day you look into the markets and the charts, you have to know what to look for, and you have to know what you want to do and what to take out of it. That is it, guys. This isn't a fancy Billy Mays speech. I'm not trying to sell you guys anything. What I'm saying is get in the market, be smart, keep your losses as small as you can, and always bet more when you're winning. Always. Because remember, as soon as you're playing with house money, oh, look at my hair's all fouled up. Well, Dillon, Montana, it's 10 degrees outside. That's for sure. It's definitely cold. So you gotta definitely be into this game to win it. Be in it for the long haul. Yeah. Be in it for the long haul. That's what I'm saying. And we needed to start with that because I got a question from a trader who's struggling out there and said, hey, listen, I still believe in Forex. I want to trade Forex. I've lost a lot of money trading Forex. Can you help me? And I said, yeah, I can help you. But the first thing you have to do is stop losing money. And one of the biggest reality checks that I ever took was when I was a young trader. And I watched Bobby Bob, good to see you. I watched a couple of my guys that were in our trading group. They lost $27,000 of the firm's money, and they lost it in about 36 hours, 38 hours. Got the memo. I printed it out. The memo was, hey, listen, the next guy that takes a big loss is fired. It's that simple. And I said, I don't want to get fired. And my uncle was the boss, but he meant it. He meant it. I mean, if you took the next big loss that comes through the door, you're fired. You're gone. And that was a reality check. I go, wow. Was I taking the losses? No. My partners were, though. So we had to figure out a different way to exist, and what that means is don't make your losses big. So I want to welcome everybody in there with that. That was a little 4-minute diatribe. I know that's sort of a, we're gonna look at some trade ideas. The biggest thing to remember today is President's Day, and there's no liquidity in the market, so there's no real reason to do anything. What I would recommend today is do a little bit of reflection, do a little bit of try to figure out exactly who you want to be as a trader and what you want to do. Like I said, the markets are closed. It's President's Day, so a lot going on. Nothing going on. We're going to talk RBA here in a second. So good to see everybody. Let's see. You want to look at the Swissy? Okay, I'll look at the Swissy here. Let me see. Emmanuel, I'm 25 now, and I started last year. Good evening, Shane. I hope you enjoyed your weekend. Yeah, I did all right. Team Marina, wow, all caps. That's a lot. I could tell some stories about, different things that, trading-wise, the leverage and different things, that the losses that were taken, and you bounce back, and now, you go in there and you grab $300 or $400 in a day trading futures. You feel pretty good about yourself, and I've managed to do that. We'll talk about real estate some other time because it can be boy, that's an emotional speech. In any case, what we're looking at right here is U.S. oil, and the reason why I bring up U.S. oil right away is I know we have some oil traders in here. Oil is my specialty, but what I will say right now is you're in a very, very tricky time, and the reason why you're in a tricky time is we have rollover. It's futures market rollover, and you have to understand that when these contracts roll, if you're trading the U.S. oil CFD, we're going to go back to the chart, and I'm going to show you some levels here in a second, but what you got to understand is when you're trading crude oil, when you're trading commodities, it's all about the futures markets. It's not about spot. It's not about what you can pay to get this stuff out of the ground. It's about what people believe it's going to be worth at a certain point in time. That's really the only way you can price a commodity, as opposed to me just showing up with $20 saying, hey, you got $20 worth of gold, and I give you $20 and you give me a little speck of gold. Well, that's one thing. That's one way to do it, and that's the way that our civilization did it for 10,000 years. We don't do it that way anymore. We price things according to what we believe it's going to be worth, typically several months in advance. And the reason why we do that is because we bring stability to the market. It's all about being stable. It's stability. It's like, okay, it's not enough to know what it is today, because if in fact we're doing that much business, if I'm buying things from you every single day and I'm turning around every single day and I'm doing that with someone else, what are we really doing? We're running a grocery store. You can't really do that with commodities. We need to have some baseline way of pricing these things. And that's why the futures markets are set up the way they are. It's all about, hey, listen, if I own a fleet of jets or jet airliners and I want to make sure that my fuel costs don't get out of hand and don't destroy my company, I have to be able to lock my things in. I have to be able to lock my inputs in, my fuel. I have to be able to do that. And the entire world still runs on oil. Whatever you think about that, it does. And this is what we're looking at right now. So we did roll over to the April contract. This is a full roll. Friday was incredibly tricky. Didn't even trade Friday. Not trading today. Today would be a big mistake to rush into the crude oil market. But what I want to point out to you guys, and this is a tip, you need to write this down if you're a U.S. oil trader. Understand right now that your U.S. oil contract, right there where my cursor is, you're pricing 71.19 oil. Well, that is somewhere in the middle of our rollover. That's March. We're pricing 71.28s in March. That's April. Pricing 71.23s. You'll notice that the tote board has stopped. Why? Early halt. President's Day. They just halted the futures markets. Gosh, be very, very careful. I don't want to see anybody losing any money. I don't want to see anybody flushing the life savings today. Believe me, there's going to be a time to take risk. And those of you that have been with me, like Bobby Bob has been with me for a long time now, you know that we're going to go hard Tuesday, Wednesday, and Thursday. That's when we go hard. We don't go hard right now. You let the amateurs try to figure out how to trade a day like today. But we game plan. I put a trade idea out earlier about asking yourself, am I where I need to be? Am I getting what I need to get out of my trading career? Am I doing it? Well, today's the kind of day that you really ask those questions. You do. I mean, it's 10 degrees here in Dillon, Montana. Beautiful place. Beautiful part of the world. Cold, though. Long winter. We got mice coming in the house. We're trying to figure out a way to manage a household here. It's tough. It's tough. Life's tough. Today's a day to sit back and say, what do I want out of the next month, the next year, the next week? There's some great trading this week. It starts with the RBA. We're going to talk about that. We're also going to talk about the law of reflexivity. But as far as crude oil goes, I almost feel bad about bringing this up. I feel like CNBC is going to rip me off. You're going to see like Rick Santelli one of these days saying, negative 40, negative 40. Nobody's doing this in the market, and I'm telling you, this will pay you off. Negative 40, something like this. That was the all-time low of WTI crude. You'll notice the chart doesn't go down there. It only goes to zero. It's not what WTI crude oil was worth -40, and it was worth -40 in April of 2020. So right there, bang, there was your big sell-off. This is the true low, somewhere right down in there. You can look it up and figure out exactly where it is. I can tell you right now, 64.50 to 65. That is big-time support, and I think we're going there. So right now, I mean, if you take a look at our monthly, you're down about 3.5%. I think that trend's going to continue. We're going to see some major resistance. If I'm a bidder, if I'm serious about bidding WTI crude oil, and I will be, I'm bidding from 64.65, but I'm very, very bearish. I'm very bearish towards commodities and WTI crude. I think that we fall off. It sounds crazy right now. This market can hit 44, 45. It can. Higher interest rates, peace deals, huge production out of the United States. You could see WTI crude by this time in the fall, 11:10 Mountain Time by the fall, just before football season. You could see it that low. Will it happen? I don't know that. I don't know that for sure. Still a lot going on, and the WTI crude oil markets are definitely one of the bigger markets played out there. I trade it every single day except today because it's a holiday, but definitely one of those markets that I'm targeting. So be careful with that. I see a big red month popping up. You can see we traded beneath, just to blow this up and sort of show you, beneath last month's low. Interesting. We sort of recoiling back up into this range somewhere around 72.50. If we push lower, that's the buy of all buys. You can see, these people they made a fortune. I sit around, I listen all day long to the YouTube folks. I listen to guys that trade and women that trade that are young, and they come in and they say, well, it's a liquidity sweep. It's a liquidity sweep. And I go, yeah, but why is it a liquidity sweep? We put this up of course it's a liquidity sweep. All the bidders stepped in and destroyed the sellers. Okay, bang, they did it. Bang, they did it again. This was sort of a proximity test. Your low right there was 65, 65.25. 65 is huge. Everybody knows that this is a bull market. Since COVID, you're still in a bull market. It's ugly. Crude oil's been ugly. That's why we range trade, we intraday trade. But for investors are still long crude. They're betting on war. They're betting on unrest. That's the biggest level in the game right there. Nobody's talking about it. You'll see it probably on a YouTube short that'll get 5 million views, and you go, just remember when you see it, you go, man, Shane's been saying that for a while. Just remember that. But that is the key technical, and also the rollover. If you're trading intraday, like today, if you want to pull an intraday chart on WTI crude, don't make a mistake. You say, Shane, it looks just like every other day. No, it doesn't. Take a look at what you got back there on Friday. We had a big move Friday. Terrible liquidity. This is about bringing the spreads in. I know I lost a lot of you guys because you don't really know what spreads are, and that's okay. I don't either. I didn't trade them in the pit, but I do know that when you have a deferred month and a front month, we start to merge those prices, and the way that happens is either one goes up faster than the other or one comes down faster than the other. Sometimes they move in unison. Sometimes they don't. This right here, that's a big move on a low liquidity day. That was a great way to lose a fortune. Nobody got in on that trend, guys. This is institutional move. Look at this is institutional. Bang, right there. Huge number. Bang. Drop another big volume on you, and then what? Then we just sort of muck around. Then we open lower, and now we're sort of grinding back. You can't trade that. That's impossible. Folks that tried to trade crude oil today, if you made $50, I would give you $100 if you made $50. I learned some hard lessons over the years, and one of the lessons is you don't trade days like today. I got way behind on the live chat, guys. Sorry about that. Sorry to get rambling on you, but it's a Monday. It's a good day for education. And, I'll pretty much tell you anything that you want to know from my own playbook. But that message today really sort of hit me. I've lost a lot trading Forex. Can you help me? And I go, man, it's just money, number one. Don't get too wrapped up in the money ever. Believe me, I've been bankrupt. I've gone bankrupt, and I've watched generational wealth get wiped off the board. I watched the hard work that I put in, that my hands bled, my parents, my dad, his body, 2 back surgeries, 2 fake hips, 8 stents in his heart. We were working construction. We were going hard, and I watched everything we had get taken from us when the liquidity dried up. When I talk about liquidity, I know what I'm talking about. Please listen. You don't trade a day like today because there's nothing in there. That means there's nobody willing to make a deal with you. And when no one's willing to make a deal with you, you're in big, big trouble. It means you're left holding the bag. And when you're left holding the bag, you're gonna lose. I got to watch my language because I get passionate about this. I was there, guys. I was there in 2012 and 2013. I had a beautiful home that I look back on it. You know, it's worth almost, $500,000 or $750,000 now. I had to unload it. I had to sell it short. And the folks that bought it from me, they made an incredible amount of money. I'm still alive. I'm still breathing. It's just money, guys. As soon as you understand that, you can trade. I love trading. A lot of good fortunes come my way. And it only came my way after I decided what I was. I'm a trader now. And without that, without those experiences, would I be where I am today? No, not even close. I don't want you guys to go through what I went through. Believe me. Don't go into the hole big. If you find yourself putting your Forex accounts on credit cards and emptying your bank accounts, you can't do it, guys. It's irresponsible. Got a text. I got a message over the weekend. Gentleman works in a Coca-Cola, works for Coca-Cola in Africa. He says, hey, I'm going hard. I love the markets. I see that as a way that I can build a better life. And I say 100%, I did it. I'm a construction worker. I had a college degree, but that's okay. I was a college athlete. All right. You can make whatever you want out of these markets, but you got to be smart. In the way that a lot of folks get crushed is on days like today with limited liquidity. All right, that's the end of the philosophy lesson. I could sit here and talk all day or wax poetic about whatever it is to be a trader. We do have some actionable trade ideas that I do need to go over. We're going to talk about the law of reflexivity and why I think it's a complete hogwash. We're going to talk about that in a second, but I want everybody to be on the same page because this is a big week, guys. We got the RBA, Reserve Bank Australia tonight. We're going to talk numbers. We're going to talk about the Aussie. We're also going to talk about RBNZ. RBNZ is going to be tomorrow night, about 40 hours from now, somewhere in there. We got to talk Kiwi. We have a Kiwi trade idea out there. I like it. We have an Aussie trade idea coming into view. We're getting hit right now. We're taking some heat on the Great Britain pound trade idea. The U.S. dollar is just ranging around. Why? Because nobody's trading right now. I expected this today. If we get our correction to pay off the pound trade, we'll get it tomorrow. This means nothing. This price action means nothing. Look at right here. Bang. We're right there. This is the Great Britain pound U.S. dollar, just to sort of retrace where we are, and then I'll go ahead and get back to the live chat. I don't like leaving that hanging too long, but this was it. This was our trade. Now, I get a lot of questions about Fibonacci's. If you have any questions about how I draw Fibonacci's, be sure to reach out on a private message, and I'll do my best to help. This was our money level, 126.10, right around 126 to the downside is what we were looking for. I haven't got the follow through yet. We haven't seen price fail. It looks to me like it could possibly move higher, but I don't want to say that just yet. And the reason why I don't want to say it is because we're in low liquidity. None of this means anything. None of it means anything. This right here, bang. We were in great shape right here Friday. It was coming our way. Your low down there is, you're somewhere around 78, so we're plus, 30 pips or whatever it was. We're down there, and then we just sort of base, and then we open for business, and now we break. This break right here is a complete fugazi. There's nothing behind it. It's a wash. What a wash is, or a sweep. I call them sweeps. What a sweep is when a big institution comes in, or somebody like me or you that has a lot of money comes in and just says, okay, we're going to push this thing higher, and they just bet a bunch, and they send higher. It means nothing. It's not about price action. It's not about reflexivity, which is what we're going to talk about. I'm going to tell you why it's sort of a fugazi in its own right. But this right here, this break in the last hour means nothing. We're going to trade right back down. Right now you're at 126.20. You're going to trade back down to 126.10, and then the market's going to open tomorrow, London. The London Open, we're going to open right in here, and then we're going to decide, is the market going to get pushed lower or higher? Right now, it doesn't look good. You've got a double top that's forming. This is about a daily double top. I would definitely be cognizant of these levels. Do you really want to be short if, in fact, we break above that zone? No, you don't. But, this right here, this should have paid us off. Didn't pay us off. So, what do we do now? Couple of options. We could cut it off right now. I don't recommend that. Nobody's in the market. We don't know what price is doing. Wait. If you want to let this one ride, stick to your initial stop loss. This is a trade idea that we put out last week. You could do it. It's already traded down, 30 pips in our favor. If you passed on that and now it's back up in our face, you almost have to ride it out. And the other thing is to be watching this double top really, really closely right here. This is one of those things that happens over and over and over and over again. And it's very important that you understand that everybody in the world can see that. You can see my cursor. You can see that little red shade. TradingView put this new thing on there, this new feature I'm kind of like, but right there. Everybody in the world can see that. That's Friday's high. Everybody knows where that is. So what do you think's liable to happen? A lot of smart money concept traders, if you're going to have a liquidity sweep, it's probably going to be right there. So what I don't want to do is if you guys are holding shorts or people are holding shorts looking for maybe a retracement down into that zone, it can still happen. The problem you're going to run into typically is this gets run first. So we probably are going to trade up here a little bit before we get something there, and then we probably trade there, and then if we win, we go there. Now, what we don't want to do, we can do that. We can take heat up there. You can hold this short as you're taking heat right up here around that swing high. That's not a problem. The problem is when, if in fact, we just open tomorrow and it just bangs. If it goes higher, you got to get out. Cut it off. Get out. Because the next level up there on our monthly, I mean, it's a long ways, guys. And I would much rather just rip the Band-Aid off somewhere in here and then turn around and take maybe another short, although that's 50% on the monthly. I wouldn't do that. But maybe up in here, that's where we make a deal. That's trading. That's all it is. Understanding where to put your money at and trying to figure out how to maximize get the most out of the liquidity you have, because nobody has enough liquidity. And I don't care if we're going to talk about George Soros in a minute. There is nobody in the world that if they're taking leverage shorts that has that liquidity to hold that. Not if they're leveraged. Not if you've got 20% of your account down on something like that. Nobody has that kind of money. If you had 5% of your account down and you tried to ride this out before the market turned, you're never going to make it. You're going to get destroyed. You'll get margin calls right in here. You can't do it. That's why we have stop losses. So I would be very, very careful around that swing high. Don't necessarily bail out of this short right when we get there. Wait for the big retracement because it will probably come. But if it doesn't and this market breaks, you got to go. You got to go. You can't wait. You got to go. All right, guys, let's see. I got way behind on the live chat. I'm very, very sorry. If you're still there watching, I'm more than happy to answer the question. So did anyone get fired, Team Marina? Yeah, they did. We had an incredible just to get back to that, if you make the next loss, you get fired. Yeah, we did. We had a gentleman that he may be watching the live stream right now is an absolute brilliant trader. No question about it, just a brilliant trader. Millionaire trader that was in the pits. Had problems moving from the pit to the screen. That's okay. I mean, it's a completely different ball game. A true rock star of the industry, somebody that they probably should be writing books about. It was my pleasure to work next to him. And what happened was he just got set up in a position that was really difficult to 10. It was, they say set up to fail. It's kind of what it was. It was really hard for him to trade the way he needed to trade given his capital constraints and the capital constraints that were put on him. But his expertise and complete brilliance, I mean, really just a brilliant pit trader, the kind of guy that was just an absolute rock star in the 90s. And he still is. I'm sure he's still in the markets. So if you're watching this, Mike, you know who you are. But yeah, that wasn't really nobody got super pink slips. They just shut the leverage way down. And you'll find in this business it's no different than you trading for a prop account. They just turn the money off, and that is what getting fired is to us as active traders. They just turn the money off. And as soon as the money's gone, you don't have any money to trade, and you're basically out of a job. You got to go find something else to do. But he was a absolute brilliant trader, and I wish let's put it this way. I wish I could have been on the floor. That was what I was born and bred to be, on the floor. And by the time I got to of age, I went to college and played baseball. And by the time I got out of college, there weren't more floors. There weren't any more floors to go trade on. And I was like, well, geez, that was kind of my dream. Even above being a baseball player, that was my dream, was to be a floor trader. And I said, well, there's no more floors. I guess I better figure this out. But some of the stories, guys talking about going into the pit in the morning, making 25 grand. That's amazing. That kind of money, I mean, he goes, yeah, we were 10 deep at the bar by noon. We were rock stars. Oh, wow. What a life, huh? That's not there anymore. Now, I mean, realistically, if you need to really watch your stop losses in this game. The volatility is so huge, but if you're serious about trading, I mean, Geez, I walk in here, you give me $350 or $500 in a couple hours, I'll take it. Take it. It's pretty good living. And it can be a lot bigger. You just got to get bigger accounts. That's all. Let me see. Brian Barbie, good to see you, Brian. Way behind on the live chat, guys. I got off on a tangent there. It's a good day for a tangent, though. There's nothing really going on. Son Goku, hey, Shane, I asked you about which trading signal ideas are live and which can we put in order. I don't know who has access to what. I mean, we have a trade thread, and I was going to have that prepared for you today, Son. I don't have it prepared for you. What I would say is I'm going to show you a couple that are live right now, and I would go with these. These are pretty good. This one right here, this Great Britain Pound USD, this short is live. So if you took this short, you probably didn't exit down here. You probably didn't take the money. You're probably still short. So if you're still short, you kind of got to ride this one out. Check out our trade ideas and our levels for that. Now, the Australian dollar, US dollar, this is going to happen. This looks to me like it's going to happen. This is going to be one of the trades that I really love. And the reason why I love it is there's a couple of things that I like to do with these levels. And I like to design trades that have a high probability of success. And the way that you do that is you figure out where a range is, no matter what time frame it's on. I will tell you that the longer the time frame, typically the more accurate the forecast is. This 38% right up there at about 64.13 in the RB or for the Australian dollar is absolutely huge. And one of the indicators that I really like to use is going to be your average daily range. I've got it right here. We'll go ahead and add it to the chart right there. Your average daily range is going to give you an idea of exactly what to expect out of a day. Now, here's the kicker. I set my default to 13 with this ADR. This is an ADR. The idea behind an ADR is the distance between the high and the low is going to be somewhere around this average. So on a monthly chart here for the Australian dollar, US dollar, I'm showing about what? 227.96. So about 279 pips coming into this month is going to be what we could expect out of our monthly range. And right there, what do we have in right now? Well, we're up about 3%, 2.5%, well, not 3%, but 2.5%. Your high right there this month is about 63.74. Your low is about 60.87. So that right there, probably right around 300 pips. Our range is pretty much in. Our ADR, our range, pretty much in. So what does that mean? It means that when we get up to 38%, somewhere right in that zone, we are going to be overbought. I would almost guarantee it. So what does that give us a chance to do? It gives us a chance to step up and take the short. Now, the other piece to this puzzle and why I'm a hybrid trader is because you have to know when the market's going to move. I mean, you could sit there and you could watch this Australian dollar, US dollar until your eyeballs burn out. A lot of times you just sit there for weeks and weeks and nothing happens. Well, it's ready to happen. And what you got right here is your RBA interest rate announcements coming this evening. Most people believe that the RBA is going to announce a rate cut, which is strange. Puts us in a real strange place because the U.S. dollar, they're not going to they're not going to cut rates here in the United States unless the Trump administration, they decide that they're going to eliminate or decharter the Federal Reserve. You're going to see rates stay higher, and Jay Powell said as much. So you got a major rift here in the United States about interest rates, but around the world, international venues where a lot of you are, everybody's cutting interest rates. Canada cut rates. RBA is supposed to cut rates. The BOE cut rates. The EU cut rates. Everybody's cutting interest rates except for two places. The United States is holding their rates firm, and Japan is raising their interest rates. So this is going to be a big time event tonight. I think that you're going to get a quarter-point rate cut. They're going to put a tremendous amount of pressure on the United States Federal Reserve to cut their rates. They've already said they're not. That right there is our short. That's a trade idea that is active, Zone. So if, in fact, you're looking to make a play, probably 64 shorts, that's going to be, pretty much what I'm going to do with the Aussie. But that's going to be a big time zone and one that I'm watching for a big-time retracement. I think that you're going to see something that it's not going to be the move of all moves, but my guess is you go up there and you trade a little bit up in this zone, and then you probably settle right in here. You'll notice I'm painting with broad strokes. You don't have to be exact. You just got to know where the hell the market's going to turn at, and potentially right in there, you got an opportunity to make a little bit of money. So I'm watching the Aussie. The Aussie is definitely in play for me. Tomorrow night's going to be the RBNZ. I got a question about the New Zealand dollar the other day. We'll talk about the RBNZ tomorrow. For me, 38%, basically the same trade. Why do I like that so much? Because your monthlies are overextended, and if you get a chance to short right up there with the prevailing trend, you got a real chance to make some money. Very rarely. I won't say that it's impossible, but very rarely Does price just break through these levels? All we're looking for is a little bit of a stutter step, a little bit of a rotation, maybe a little bit of a fist fight between the buyers and sellers. That's all we need. That's all we need to make money. But you have to know where those levels are. It's taken me more than a decade to find them. Trading's fun now. Australian dollar, Canadian dollar. This is another one sewn that is definitely in play. Unfortunately, we missed. I feel bad. I still have 2024's low out there. We wanted to buy right down there by that spike low. A lot of guys would say, "Oh, that's a liquidity sweep," and whatever. But bottom line is this: that's where we wanted to bid, and we didn't get a chance. You can see right now we're about 300 pips up. We missed this trade. I'm going to leave it on the board probably until it comes in. If it does come in, maybe later this spring. But that was a real good trade, and that was one that we probably should have got, but we didn't quite get. I thought we had it right there. I thought we had a January. That would have been a pretty easy trade to make a few bucks on. All right, let's take a look at gold. Everybody loves gold. Not a party without gold. What was the big trade idea last week? We put one out Friday that really showed exactly where we needed to be, right around 3,000. And check your trade ideas out. We were looking to go short from right from 29, somewhere in there, 29.95-ish, 29.94.50. That was your short. It just hasn't quite developed yet. But if you do, if you're interested in intraday trading today, you shouldn't be. The CME just closed for their early halt. This right here, one more quick lesson about holiday trading. That right there is impossible to know which way the market's going to go. It's impossible. And the reason why is the buys are hitting the market, the sells are hitting the market, but nobody's hitting it with any conviction. Right there, we had a big sweep higher on today's open. That's almost a 0.25%. You ran from about 28.97 all the way up to 29.03. That's a big move. I mean, that's a $6 move in 30 minutes. And the only reason why it happened was because there was no sellers. And then the sellers come in and they come down. So, I mean, everybody gets destroyed. What I'm saying here is if you're holding longs into that, okay, maybe you did well. I hope you got out and took the money. But if you're holding shorts, there was a lot of reasons to hold shorts today. Take a look at what happened Friday. Friday was a great trading day for gold. We had an absolute banger trend day. We knew immediately once we got this compression, this break right here, we go trend day down easy, get on the sell side of it, or counter trend scalp like I did. Nothing wrong with either one. Just watch your risk. But today, nothing. There's nothing there. There's absolutely nothing there. So the question is okay, Shane, then why'd the market rotate where it rotated? And I said, well, there's a couple of things that I would look at. Like a mechanic would look under the hood of your car. I wouldn't be looking at 1 hour charts to figure out what your car's doing, but I would go to a daily and I'd say, okay, what the hell's going on here? Know your levels, know your key levels. We made a video about key levels a while back on our YouTube channel, How to Trade Calm YouTube. Check it out. It was a good one right there. Why do you think we rotated in that specific area? Number one, it's 2,900. That's a big round number. Number two, it's a 38% retracement off of Friday's range, which is a trend day. Okay. Oh, that's great. Look at your 30-minute chart. It's not an accident. We straddled that line the entire day. It's because it's important. So going into tomorrow's trade, how would I trade it? My eyes are already aglow. I mean, this is like Christmas morning for me. Watch the key levels video if you haven't already. I can already tell you the biggest level on the board tomorrow. And everybody's watching it, and everybody knows it. It's Friday's low. That's the single biggest level on the market tomorrow. Everybody's watching it. That right there, if in fact we take out yesterday's low, bang, we're going to go lower. Now the real question is how far lower? Breakout sell beneath yesterday's low, or Friday's low, excuse me. It's a banger trade. That's a layup for at least 5 to 10 ticks. Let's go right here to a weekly. Uptrend. Okay. You got an uptrend rolling. What other levels should we be watching? Last week's low? 1,000%. Do we get there? Probably not. Maybe. If we break beneath Friday's low, make a run at last week's low, then we could, of course, we could retrace deep into the belly of this thing. Spike low there, spike high. I know it's a long ways down there, 28.09. That's probably the money buy of the spring. If we get a chance to buy that this spring, you can't miss it. You got to take it. So definitely something to think about there. Once again, I'm way behind on the live chat. T Marina, let me see. T Marina, can you share a possible pullback to a gold long? There you go. I read your mind, didn't even see it. even see it. Okay, I had a question about the U.S. dollar Swiss franc. We're going to go ahead and do this, and then we're going to talk a little bit about the law of reflexivity, and then we're going to go ahead and sign off for today. Been a long day today. Not really much going on. It's days like this are boring. There's an old saying in trading: if you have to think for too long, typically you're pretty screwed. It's the truth. If you sit here and you think about what you have to do that long, react, get your strategy, and just read it and react. That's how you're going to have success. In any case, right here, the weekly, nice compression right here. The biggest question probably, to the person that asked me for the U.S. dollar Swissy is, am I bearish or bullish? Neither. Swiss franc is one of those that I sort of treat in isolation as opposed to the rest of the majors. I could pull a monthly chart here and show you an area to sell, just like I did with the Kiwi and the RBA and also the Great Britain pound. I don't know that you necessarily want to do this. Do you want to buy the Swissy or play against it? I'd be real careful right here. Markets have memories. This triple top right here was probably a trade idea that we had probably last fall. Didn't quite develop for us, and now we're coming off. So when we look at something like this, you say, Shane, how do I trade it? I'd say, well, you did have some pretty good movement the last couple of weeks. Let's take it right down to a monthly and see if there's a retracement level that we got. And it's basically the same type of level, guys, that I just showed you on all the other majors. I don't recommend trading the same way against all majors. But if you're trading the well, this one's hard to pass up on. That's money in the bank right there. 38%, 88, 86. And you've also got a 13-month EMA right there at 88, 85. Sign me up. Shane, what do you mean? This. Buy that. That's about as easy as I can make it. I hope that really works for you on the Swissy. Now, as far as an intraday strategy, I get this asked literally twice, 3 or 4 times a day, and I'm flattered. Keep asking questions, guys. What time frame do you like? 4x, 4 hour. 4x, 4 hour, and the reason why is you actually have decent moves on a 4-hour chart. That's what happened today. Thursday, bang, bang. There's Friday. Then we sort of crept up. What happened today? We went up, tested a 62%. We're still just sort of in limbo here. There's not a tremendous amount going on, but what I'm saying is the 4-hour on the 4X, you actually have some ranges and some moves you can work with, and that's really what trading is all about, is trying to figure out when to trade and exactly what type of range to trade. Let me see. Okay, looks like we got spammed right there. All right, a little spam message. Okay, last thing I'm going to say today. I've gone on way too long, but this was a good day to sort of talk a little bit of psychology and a little bit of my mindset, my journey as a trader, and I hope it helps you. I mean, that's what this whole thing's about, is to help you. I heard a lot about reflexivity over the weekend. For some reason, some things just pop into your sphere of consciousness, and somebody was talking to me about reflexivity, or it was on the news or somebody. I don't remember, but the theory of reflexivity is an economic theory that explains how expectations and market perceptions can influence prices. This process can lead to price trends that are far from equilibrium. This was a theory from George Soros, and basically this is him butting heads with Warren Buffett. Warren Buffett was Mr. Intrinsic Value, trying to figure out what exactly something was worth before the rest of the world knew what it was worth. And this right here was Soros's take on it. He said, well, people believe what they want to believe, and that sort of makes price. And what happens is that divergence between what people believe something's worth and what it's really worth leads to these trends in pricing. So if you were going to go to the Swissy chart and say, did the law of reflexivity drive this down? No. Don't get caught up in things like that. As an active trader, I need to know a couple of things. And I don't care what George Soros thinks, and I don't care what Warren Buffett thinks. What I need to know is I need to know when the market's going to move, and I need to have a technical strategy in place to trade it. That's it. Now, if you don't want to go the technicals route, then you've got to have a gut feeling, and you have to be able to trade according to your gut. Everybody in the world doesn't believe that's possible. Now, your gut's never going to win. I knew 2 millionaires that traded on their guts. You can get really good at just calling a market. You can. Takes time, takes experience, takes losing. You have to lose to get that gut. You can do it. Going back to Soros and this law of reflexivity, I want you all to remember, don't ever get fooled by this stuff. And I mean this. This is a good day for this. Don't get fooled by it. It's a theory. It's an economic theory. Well, I have a theory too. You have theories. We all have theories. Spike high, spike low. I know damn good and well that if 90-20, 90-20 and a quarter breaks, you're probably going to see the Swissy rotate back up into here somewhere. Let me get my highlighter going. Realistically, if that breaks, you'll see price rotate up in here somewhere. Okay? That's my line in the sand. My theory is if we see a little stagnation right there, I want to be short. I don't want to be long. And it has nothing to do with some elegant economic theory put out there by a billionaire. Learn what you learn and know what you know. And remember, you don't have to know very much to make money in this game. You just have to know what you know who you are, know what you have to work with, and then go in there and take what you want. That's it. Did a lot of philosophy today. This was a good day for it. Happy President's Day, everybody. Interesting session. Boring, really. Tomorrow's business is going to be back in. We're going to be trading hard, probably starting at 5 a.m. my time tomorrow. That's great. If we do it right, we'll be in a great position by 11 or noon. And that's what any of us can ask for. All right, everybody, I got one more question, then I'm going to go ahead and sign off. Higher time frames advantage, like which is better, the 1 hour or the 4 hour? So it's all about, for me, I'm a big fractal guy, and I hear a lot of people talking about fractals and fractal geometry, but they don't think practically about fractals. They don't understand that a 4 hour chart, think about it, a 4 hour chart goes into 1 day how many times? 6. There's 6 4 hour chart price bars, 4 hour price bars in 1 day. So when I look at a day for a Forex, I'm looking at a 4 hour because it divides the day up evenly. Now, you say, well, why can't I use a 1 hour? And I'd say you can use a 1 hour. You can do whatever you want. A 1 hour means you have 24 price bars. The way that I was taught to trade is try to figure out what the next price bar is going to look like. And if you can do that, you're going to make money. Think about that. Is it easier for me to figure out what the next 4 hour price bar is going to look like or the next 1 hour? 4 hour. The more decisions you have to make, the worse off you are. I like to keep it very simple. So I would go with a 4 hour. If I was you and I was starting out trading Forex, or you've got banged up, 4 hour chart for Forex. If you're trading U.S. futures and U.S. equities indices, 30-minute chart during the U.S. session. And if you want to trade some of the majors and you want to start during the London Open, 30 minutes is as low as I would go as a duration. So if you want to trade from the London Open to the U.S. mid-session, if you want to trade the London session, you could probably do it with a Forex on a 30-minute chart and get away with it. 4 hour charts are the best for Forex, no question. As far as spot gold goes, yeah, 4 hour charts give us some great entries. I love my dailies and my weeklies, my monthly levels. Those are my favorite by far. Super Shan, good to see you. That's such a great way of explaining it. Well, I mean, we've talked a lot of philosophy today. I might as well tell you. I remember my uncle. He was my mentor, my boss. He's the guy that taught me how to trade. He taught me the game, and he sat there and he said, all you need to do is know how the next price bar is going to form, and you can make money. And I thought about it, and I remember it was a 30-minute price bars, and he had the American session. Geez, he traded 4 hours. He goes, listen, I've only got 8 price bars in my day. He goes, all I got to do is figure out how one of them is going to move. That's it, and I'm going to walk away a winner. And I sat there and I went, it's that old speech. He goes, Shane, you're dumb enough. I'm going to make this easy enough for you. And I go, that stuck with me all these years later. Do I know what's going to happen on the next 1 minute bar? Nope. Do I have a pretty good idea about how the 30-minute bars are going to form? Yep. Are they too expensive to play a lot of the times? Yep. That's why I've got to refine my entries. All right, Bobby Bob. Thank you, Coach. I really love the psychology session. I get to learn a lot. You're absolutely welcome, Bobby Bob. Thank you for dropping in. You've been here for a long time, and if you want to stick in this market and make a go of it, I'm confident that you'll find a way. It's not easy, though. I remember having a pretty good understanding of the market, and I didn't have any way to trade. And you guys now with the props, I mean, even switch markets, you can go to switch markets, they'll double your deposit bonus. There's none of that existed when I was starting out. So take your time, Get in the markets when you're ready to get in, and then when you make your decisions, have confidence and stand by them. That's it. That's all I can really say. All right. I'm going to go ahead and sign off, guys. It's been an absolutely fantastic session. Sort of reaching out to that question that I got earlier today about losing a lot of money in the Forex. If you want to talk, or maybe we can line a mentoring session up, I'm more than happy to do that. I can't do it for everybody, so we're probably going to have to limit that a little bit because there's only one of me now. But, it's important that if nothing else, you just talk about your losses a little bit and get that off your chest, and then move forward with it just a clear vision about where you want to be. And that's what days like today are for. They're about reflection and planning. I was sort of a little bit lax and poetic today. I'll be all business tomorrow because I'm ready to trade. I can't wait to get it on. It's going to be a fantastic week. All right, guys, I'm going to sign off for now. You have an absolutely fantastic trading day. Don't lose any money today. We'll lose it. We're not going to. Who am I kidding? We're not going to lose tomorrow. We're going to win tomorrow. But today's a great day to lose. Avoid those days. Have a fantastic trading day. Have a fantastic day. Have a fantastic evening. Thanks for joining me. We're going to be back here tomorrow. If you need anything, you let me know in the room. Send me a private message. I'll do my best to get back to you. That's a wrap. Trade well, and we'll talk soon. See you.